I think we're going to be in for a wild year. If you remember what happened in 2020, silver went from like what was it, $25 to like $11 in a few
Yeah.
days, and gold went down from 1700 to 1450. Something like that's going to happen again, and you have to be ready emotionally for it. I think that is going to happen this year. And once that happens, I think that's going to be the last time. So I've been waiting for a repeat of 2020 for 4 years now, and if it happens in 2025, you have to be calm enough to realize this is what is supposed to happen, and then buy the dip, and then watch and wait because after that I think they're going to explode.
Gold's price rally takes a step back and might need to look for further support on the downside. Markets were blindsided by President Trump, who had already come in quite hard over the weekend with tariff threats for Colombia and now puts universal tariffs back on the table. Inflationary concerns triggered by these tariffs could mean higher yields, possibly no rate cuts in 2025, and thus headwinds for gold. Monetary analyst Rafi Farber predicts 2025 metals will dip similarly to 2020, urging calm and buying opportunities. He expects a sharp rise in prices afterward. Rafi notes growing interest in physical assets as inflation rises, though Bitcoin remains popular. He predicts a liquidity crunch will cause sharp Bitcoin sell-offs while gold and silver hold value better. During reflation, silver and gold will outpace Bitcoin. Bitcoin and gold exhibit similar short-term behavior, responding in nearly the same way to geopolitical events. Gold outperforms Bitcoin in the medium term, with stronger performance in 61.8% of events over a 90-day period. From a technical standpoint, Rafi predicts that gold and silver prices will rise significantly when the Federal Reserve intervenes, with silver outpacing gold as the gold-to-silver ratio narrows. UBS expects silver prices to climb in 2025, buoyed by lower U.S. real yields and stronger global industrial production, even as the metal struggles to match gold's central bank-driven gains. After ending 2024 at $29 per ounce, StoneX projects silver prices to average $32 this year before rising to $33 by year-end, for an annual gain of 14.1%. In his assessment, Rafi emphasizes a surge in COMEX gold inflows, with up to 2 million ounces added daily, due to tariff avoidance or broader monetary shifts. Most gold is moving into eligible supplies, indicating private ownership. Farber predicts significant developments ahead. World Gold Council stated that global gold ETFs booked their first annual inflow of $3.4 billion in 4 years, and in December recorded $778 million in inflows, led by Asia and Europe. Now we present the clips of Rafi Farber's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
People aren't going into fiat; they're trying to get out. But yeah, look, they're going into Bitcoin still. But I think that all reverses itself when the liquidity crunch happens, because in a crunch you need dollars, you don't need Bitcoin. So people sell their Bitcoin for dollars to service their debts, and that's when the thing deflates.
Right.
And once it deflates, gold will deflate. Gold doesn't inflate or deflate, but gold sells off, but it sells off much, much less than any other asset. If you go back to March 2020, and you look at what was happening with Bitcoin, it crashed in March 2020 along with everything else.
Right.
Gold went down from like 1700 to 1450. Is that a crash? Well, yeah, for gold, it's a crash, but like compared to anything else, it's not.
Yeah,
It's
absolutely.
pretty stable. So that's what's going to happen again. It's just going to be a lot worse for Bitcoin and a lot less bad for gold. And then when the reflation happens and the Fed prints the difference, it's going to be gold and silver, primarily silver, and then gold. And Bitcoin might reinflate a little bit, but I don't think it's going to get anywhere near the ratio it is now with gold. That's pretty interesting going on with gold specifically now, less so silver, but silver a little bit. The COMEX is actually stacking up on the coffers, the vaults. They're really starting to fill up. There's like a million or two, between a million and 2 million ounces of gold that are going into the COMEX every day now. And this hasn't happened since March, April, May 2020, when like that huge spike in COMEX supplies just like kind of just like went vertical. And to this day, I don't really understand exactly why that happened. And people try to explain it, but I don't think anybody really understands it so well. Something about the spreads blowing out, but then try to explain why that happened. They don't know. But whatever it is, it's happening again. It's not as extreme as it was in 2020. However, last week was it was either the strongest week or the second strongest week in terms of gold, physical gold flowing into New York from probably Switzerland or something, either Switzerland or London, but I don't know exactly where from. So now people have tried to say, and they might be right, that this is like a tariff dodge, because once tariffs go up, it could be that gold is going to be tariffed by the Trump administration by 10% on imports. So they're trying to get their stocks in now
Oh,
to get around the tariff. I think that might be true, but I don't know for sure because I don't know anyone personally who's actually doing this. So it could be that, or it could be something monetarily is happening, similar to what happened in March, April, May 2020.
right.
Some kind of monetary rumblings going on that's inspiring all this gold importation. But the numbers are really pretty staggering. And most of it is going into eligible supplies rather than registered, which means eligible is not for sale. It's like privately owned, and registered is registered against contracts that, short contracts that people are putting up their gold to sell. So most of it's privately owned. So like there's like big parties that are moving huge amounts of gold into New York, maybe for tariff reasons, maybe not. But I mean, we'll see. It's big, so something's going to happen after this. We'll see what happens there. I think that once the Fed steps in, gold and silver really start taking off, and silver when silver really starts taking off faster than gold, we'll know we're almost there, and that hasn't happened yet because we know the gold to silver ratio is like back up to 90 or some crazy number like that.
In the interview, Rafi Farber tracks the reverse repos, noting that extra printed dollars are running low, with only $90 to $100 billion left. As the U.S. government faces a debt ceiling crisis, once the remaining $650 billion is used, the Fed will likely need to print more money to cover the shortfall. Reverse repurchase agreements absorb reserve balances from the banking system for the length of the agreement. As with repurchase agreements, the naming convention used here reflects the transaction from the dealer's perspective. The Federal Reserve receives cash in a reverse repurchase agreement and provides collateral to the dealers. Reverse repo usage fell back under $100 billion to a new low of $92.863 billion this afternoon from Friday's $104.877 billion. Today's low compares to $94.489 billion on Thursday, January 16th, then the lowest level since mid-April, 2021. The number of counterparties rose to 26 from 23 prior. Regarding the global economy, Rafi raises concerns over central banks' mismanagement and unsustainable global debt levels. He warns of a synchronized financial crisis exacerbated by European political instability and the erosion of shared cultural values. Let's get back to the interview.
The other thing that I'm watching is that number that I've been tracking for since 2022, the reverse repos. That's the extra dollars that were printed that were never used.
Right.
Now they're empty. Like there's like between 90 and 100 billion left, but in the scheme of things, it's not really that much, and that can go to zero any day. And now the debt ceiling has been hit, and the federal government has like $650 billion left to spend. And once they do that, they're going to have to raise the debt ceiling because they always do that. And once they do, then the once they raise the debt ceiling, let's whenever the $650 billion runs out, there's not going to be any extra money to raise to sell all the short-term debt they need to sell to fill up their account again. So the Fed's going to have to print the difference. What is concerning me most about the global economy right now? That would probably be the central banks,
Yeah.
where they screw everything up. But I mean specifically, when when the dollars run out, and you have all these countries that are just super saturated with debt, and we all know, but that all has to go away. And when that goes away, it's going to happen all at the same time. Like it's these financial crises, they happen at the same time every time.
Right.
They always go global. And so with with the political instability going on in Europe right now, and they're trying to deal with their immigration problems. I think they've finally realized that it's a serious problem. And the UK is a complete basket case, and nobody likes Keir Starmer. And I don't think there's any single European leader that is beloved in any country
Right.
in the old world. I worry that Europe could erupt in chaos, um, because what really keeps their culture together? They used to be a religious continent where they believed in God, and they had a strong strong religious identity. They don't really have that anymore.
Right.
And America's kind of getting it back a little bit. They're kind of, I think Trump mentioned God in his speech, in his
Yep.
inauguration speech. I was like, wow, that's old school. That's pretty encouraging. To acknowledge that there's a power above you, even if you're Donald Trump, who doesn't like to do that. I was like, that was the most humble I've ever heard him speak. So I guess my answer to the question is, what is my worry about the economy? It's more my worry is that when it falls apart and the material to satisfy, short-term desires is no longer there, then people turn on each other because they have less of a view of a higher power to keep society together.
Right.
I want to be around people who are moral and outside of the big cities. So
You know,
that's where I am.
For investors, gold also remains a reliable hedge and portfolio diversifier. While short-term fluctuations could happen, long-term trends suggest the metal will continue to hold its value amid today's economic uncertainties. How will central bank actions and geopolitical developments shape the performance of gold and silver in 2025? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.